Before you're 18 years old, there's not much you can do financially without your parents. You can't open a bank account, you can't get a credit card, and you cannot sign a contract that is binding. But before you're 18, you can secure tens of thousands of dollars in federally backed student loan debt without any parent consent and with no knowledge of what you're signing. Now, in 1992, they signed the Higher Education Act, which made people under age 18 eligible for federal student aid. And they're able to sign and commit to a contract that is binding that will carry with them until they pay off that debt. Now, the government knows the vast majority of 17-year-olds and younger know nothing about finances. Even older, they don't. And the data shows us as well. Most kids can't pass even a basic financial literacy test. They can't understand the terms of repayment. They don't even have a working budget. They've never experienced paying bills in their lives for the most part. But yet they feel it's a 17-year-old can commit to student loan debt in high numbers. I personally consider this predatory lending. When you read what predatory lending is, a few key things pop out. Targeting a vulnerable audience. Well, minors are a vulnerable audience. These are kids, and they're able to commit to tens of thousands of dollars in student loan debt. They also say exploiting borrowers' lack of knowledge. Their lack of knowledge is public knowledge. Everybody knows that they lack that knowledge, and yet they're exploiting these young people. And the terms of the loan, I think, are unfair when compared to other types of loans out there. I'll get into the reasons why and dig deep into detail here. Now, do I think student loans to people under 18 should be eliminated? Absolutely not. But for those that are getting it, they should be able to pass a comprehensive financial education programs that shows they're competent and capable of making financial decisions that are in alignment with their long-term goals. Later in the show, I'll get to what that class should include in the scope of that program. But let me dig deep into detail on why student loans to people under 18 are predatory. And really, I want to create a movement of people attacking this major problem that's, I think, unethical. And it's really taking advantage of minor children. Now, number one, the scope of the student loan debt issue. Most people don't realize it's at $1.7 trillion. If we look at auto loan debt total in the US, it's at 1.6, and credit card total is only $1.1 trillion. So it's much more than college debt, than a credit card debt and auto debt. So $1.7 trillion what people owe. The average person owes, this is in 2024. Let's round up a few dollars to $38,000. $38,000 in student loan debt. Now, when we compare that with credit card debt in 2024, the average is $6,900. That's rounded up a few dollars at 60, 64. But again, student loan debt is 5 times the size of the average credit card debt. It's a major, major problem. And this is not really explained very well to kids when they're signing their life away into this debt indebted situation. Next, repayments. If we look at repayment history of student loan debts, it's typically at a higher default rate in terms of 90-day lates, which can incur penalties and other problems that people face. Now, I'm going to go back to 2019 because this was pre-COVID. Currently, they have a program going on for student loan repayment. It's called the Fresh Start program. That's expiring September 2024, so 2 months after or before. I'm recording this 2 months before. So in 2 months, that's expiring. So let's go back to 2019. And this is very similar to previous years as well. Student loan late payment rates, 90 days plus, were at 11%, just over 11%. Credit cards were at 8.3%, and automobiles were at 4.94. So again, here it's showing us that there's a high amount of risk with student loan debt and people's ability to repay. When you have 1 out of 10 that's experiencing a 90-day late plus, that's a problem. Now, combine this with the fact that 23% of people then were in forbearance or deferral. Okay, so if we look at that, we're adding those together, it's 30+% that were unable to pay on a timely manner. And the main reasons people get a student loan deferment or forbearance is due to financial constraints or job issues there as well. They're unable to get a job. And this does not even include that. I totaled this up 30%. This does not even include the many students that continue to go back to school because they're unable to afford repayment. So there's a lot of students out there, they graduate, they're starting to think about what they want to do. They see what they would need to repay. They're unable to, so they stay in school. So if we look at all that data together, I would say 4 and 10 are going to have very serious issues. They're either going to be forbearance, deference, 90-day late, and or staying in school for extra time. So compared to other debt out there, that's extremely high, and that once again points to this loaning to 17-year-olds and younger as being very predatory. We also have very unique loan terms with student loans. With credit card or automobile debt, it's very easy to negotiate that debt when you get into financial trouble. Very easy to negotiate. There's companies out there that negotiate 20, 30, 40 cents on the dollar to pay off credit card debt. You can negotiate with creditors very easily. Automobile lenders, that's you can negotiate too. Sometimes if you have a good case and they understand that, hey, it's either it's if it makes financial sense for them to repo or for them to waive a few payments for you to get caught up, there's a good case. But with federally backed student loan debt, it's very, very challenging, very, very rare. In addition, the bankruptcy process to go through and discharge student loan debt is extremely difficult compared to credit card and other revolving type of debt. So we have loan terms that are far more strict than any other type of loan, once again, pointing to that predatory nature. Next, it's not very student specific. So I, as a performing arts or liberal arts major, whose projected income is 35,000. This is in 2024. That's what the graduate's a very low in demand major. So it's but a lot of these schools are teaching it, but there's not a lot of job opportunities. The job opportunities for those types of majors are lower, but nobody cares. So if I'm getting a federal loan, a student loan, they don't care what my major is. They don't care about my ability to repay. They don't care about my career path. I can be an astrophysicist and get the same amount of loans as somebody that's going to be a performing arts major. Now, obviously, astrophysicists will need multiple years and so forth, but for the first few years, through their initial BA or whatever that initial coursework they complete is, they're going to be eligible for the same amount. They don't care about the career path you choose. They don't care about those types of things. So that's problematic. Every other type of loan out there is looking at the ability of the borrower to repay. But for some reason, with federally backed student loans, they don't care. Repay it or not, it's going to be with you. You're going to pay us back at some time, but they don't care about your ability to repay, which is very problematic for me as well. And big picture, and this is, I know some people get upset when I say this, but for the majority of people, college is not a good investment. Now, hear me out here. I think for those people that do college and choose the right major and follow a certain career path, they're going to outperform in the tune of millions of dollars more income over their lifetime. But for most people, it's not a good investment. Just two data points. Be open-minded until you hear these two data points. Number one, a third of people that enter college drop out, 32.9% to be exact, drop out of college. So they drop out, so they enter into school and drop out. Many of them accrue student loan debt and then drop out. That's a double whammy. They have debt, no degree, and they feel bad, right? And now they're trying to pay this off with a high school diploma. Very tough. The second figure, which is even scarier, there's 45% of students that work hard. They get through school, they earn their degree, they get their diploma, they're celebrating their graduation ceremony. 10 years later, they will be in a job that does not require a college degree. And not just 10 years later, all through those 10 years, they'll be in a job that does not require a college degree. So they went to school, got all the student loan debt, graduated, they thought they were doing everything right, and now they're what they call underemployed. They're not employed in a position that requires them to have a college degree 10 years later. So if we look at that, well over 50, 60% of students, it's not a good investment. In fact, all those people, the people that drop out, 33%, and the 45% that earn their degree and they don't get a job that requires a degree, that likely is not a good investment for them. So we have the majority of students entering college is not a good investment, but schools are always preaching, hey, go to college, go to college, go to college, but they're not giving them career planning or help on what's after college, or is college right for them? Before you spend the money, is college right for you? So again, college, as far as the investment, it's not good for everybody. Lastly, I think with student loan debt, it sets a scary precedent for how youth manage their money. Let me give you an example. With credit cards, I turn 18, I get 50 applications in the mail, sign up for this credit card, whatever. I sign up, I get my credit card, take my friends out for the weekend, go party, go have fun, spend $1,000. I'm going to feel that pain the next month because I'm going to get the bill in the mail and see, oh, I owe $1,000. Okay, well, oh, I have to pay $50, right? I'm feeling that pain immediately. So I know I spent money. Now I have to start to repay that. Maybe I'm just paying the minimum payment. Now let's fast forward 9 months, right? I spent $1,000. I've been repaying $50. I know after, let's say, 10 months, just make my math easy, I paid back 500, but my balance has only gone down by $50 or $100. I'm like, why is that? Well, I'm learning about interest in a much safer way, right? With a small amount. With student loan debt, they're signed up for 10, 20, $30,000 in student loan debt year after year after year, and they're not feeling the pain. So they never have to make the repayments. And then all of a sudden they graduate and they see what they have to repay. Now it's a reality check. We did not allow them to learn something in a safe environment where we're just making small mistakes and able to adjust our spending habits and things to accommodate. If we're delaying that pain by 4, 5, 6 years, they haven't been able to learn on small amounts, and that can make a very big difference in their overall spending. So again, that's my points for why lending to people under 18 is predatory. It's not ethical. It's wrong, especially if you don't have parent consent. It's a shame the federal government would back any program like that. And I'm a big believer for those in certain career trajectories, college is important. I want that opportunity there. And the solution is easy. If they want to continue this, make sure everybody that receives student loan debt has proven their ability to make qualified decisions. They have a clear career path. They understand repayment terms. They've created a long-term plan for themselves. All those are prerequisites before you start lending money to little kids. Otherwise, it's completely unethical, completely wrong. So a class would have to be very comprehensive. Need to be extensive career planning. Most kids, when they go to college, they don't have an idea what they want to do. They switch majors multiple times. That costs them time. That costs them money. So making sure they're exploring careers, and it blows me away to this day. Schools, elementary, high school, even the first few years of college, they're not doing anything with career planning. I very rarely run across people that have any career planning at any level of schooling, which is absolutely ridiculous. That's a basic foundation of being able to earn money. And that's a foundation of being a self-sufficient and contributing member of society. Career planning, income planning, entrepreneurship planning, that should all be in there. And this way, students can make a judgment. Do they need college, right? If they want to be a build houses, they don't need college. They may need some trade school or something specific. So we can help them explore the careers and define what education path is going to be best for them. Second, we need to have them understand basic budgeting of life, right? Being able to budget life, what things cost, what things will run them. We need to budget with their future job in mind. So, hey, if you're going to be a hairstylist making 50 grand a year, here's what that budget would look like. Now, what could you afford to repay in terms of student loans while being able to meet your savings goals, right? That's the question. Third, they need to be able to calculate a ROI from whatever college they choose. So what's the return on investment and when will they recoup that? Not only that, will they be able to afford the payments in the meantime while they start working toward getting that return on investment? So all those things are very critical. Fourth, what are the alternative options? Right? Maybe I go to a community college, or maybe I do online schooling, or maybe instead of going to this high-end school, I back that down a little bit and go to a local college where I'm learning the same things. May not be that prestigious degree, but will that prestigious degree mean more money in my pocket or a better return in a time where I'll truly be able to enjoy that? Next, they should have a overall plan for their finances, meaning what do they want to be, right? Financially. I mean, some people want to be ultra wealthy. Some people want to just, be able to live. They don't mind working 5 days a week and taking weekends off here and there. What's that overall vision? Now, you may think, hey, that's a little too much for youth to know exactly, but it's important they start the plan. If they want to have a home and a family by age 25, does incurring $100,000 of student loan debt lend to that goal, right? Or not? So we need to help them do that. Now, what I'm proposing here, it's not just a 5-hour workshop or like what these state mandates have, the average 20 hours of financial education. That will do little or nothing. That's going to require a huge commitment on the part of the school system and communities to make sure these people are educated. I think it's the role of the federal government and the schools that are getting the benefits of these loans, right? They're charging a ton of money for these schools, and a lot of them aren't worth it. Let's be honest, right? They're not worth the money, and they're charging a lot of money, and they're making a lot of money. The federal government's supplying the money, so they're lending that. So I think those two stakeholders should be funding very comprehensive financial education programs in schools that start very young. I would say starting elementary, working through high school, and preparing them for near-term life events, financial college planning being one of them. So it's not just a 5-hour workshop that does nothing. It should include very comprehensive testing and other types of evidence that we can use to prove that they are capable of making those decisions. We should see projects where they've developed their plan and it makes sense for them, meeting with counselors to get feedback and response back. My high school counselor, what they told me is go visit 5 schools, 3 schools, 5 schools, see which campus you like the most and go there. Absolutely insane advice, doesn't work. So if we would instill comprehensive programming where these little kids were asking to make tens and tens of thousands of dollars of financial decisions before they even have thought about money, before they even experienced debt, before they've even done their own budget or pay their own bills, before we lend them this money for these predatory loans, we need to make sure they're competent. If they're competent, then it's not predatory, right? Then we're helping people advance their careers, advance their life. Until then, it is predatory. We need to stop lending to kids, little kids, right? And we need to make sure our next generation is protected, because when they're not, I hear stories all the time. I see it all the time when I look at credit reports. People are in a lot of student loan debt. It's hampering all of their goals. They're not able to buy homes, do certain things that they want to in life because of things they committed to when they're children. So please help us advance this cause. We cannot be lending to little kids anymore. We need to make sure that if that is done, they're competent to make qualified decisions so they can live a better, more fulfilling life.